You are very welcome back to the show. Now, lots of European digital banks are offering Irish customers ways to save that we really have not seen before, and where to put your money, and we're going to discuss all that now.
But are the shiny new phone banks really better value for that lump sum, or would you get more bang for your buck at home? Here to tell us all, we have David Looney, who is financial advisor with Alpha Wealth here in Cork. David, you're very welcome to the show.
Welcome, David.
Maura mentioned a neobank earlier on. What in the name of God is a neobank?
A neobank, or an online bank as they're called, is basically a bank that exclusively operates on an online platform. So they provide a lot of the products that we're used to, like, you know, your current accounts, your loans, your savings, your investments and protection, let's say. But they're solely available through, let's say, a mobile app or a website. So no physical branches, and because they kind of have a bit more of a nimble operating model, less overheads, they can afford to be a lot more competitive than maybe, say, the Irish banks for things like, you know, savings rates, loans, etc., current account fees. So I think they're starting to give the Irish banks a run for their money, essentially.
Do you know what's interesting? I would say, say, have Revolut, okay? Yeah. And I know there are lots of banking facilities on that, and there are lots of other ones in the market that I don't know about. But are we just getting into this now, Irish people? We're kind of, because we're banking online anyway with our domestic banks, right? Are we getting interested in these banks, which are European banks?
Yeah, it's definitely gaining a lot of traction, particularly kind of in the last 2 years, mainly, as I was saying earlier, because interest rates have gone up a lot now, so these banks have the scope to advertise more attractive rates. There was a lot of kind of, I suppose, reports in newspapers this year that shows that Irish people are much better than maybe other countries in Europe at doing things online, like banking online, shopping online, but we're maybe not that good yet at maybe making sure that our money's in the right place and it's working harder for us. But it is certainly gaining a lot of traction. Like, there was a report in the newspapers yesterday that the amount of money that Irish people have in, say, overseas banks that are available through these platforms, it's almost doubled, let's say, in the last 3 years.
God, that's interesting,
double.
isn't
I can't believe it.
Yeah, almost double.
No, Dave, what happens if something goes wrong? For example, if something goes wrong, or if a bank that I'm with at the moment goes bust here in Ireland, I can go to a place in Gorton and say, hang on a second here, I can stage a protest, or I can do what I want. What happens if it's online? Where do you go? What do you do?
Yeah, no, it's a great question, Dahi, and it's look, a real concern that people have. A lot of clients ask me, I suppose, how safe are these banks? Let's say, are they as safe as the Irish banks? And they're very surprised when I tell them that in some cases they're actually much safer, because all banks have a credit rating based on their financial strength. So your A, B, your C, let's say. A lot of these online banks, they provide exposure to credit-rated institutions. So it could be like, let's say, a AAA credit-rated bank, which is the highest possible credit rating you can have. It's the same credit rating as the US Federal Reserve. And it might surprise people to know that most of the banks operating in Ireland, the pillar banks, they're B credit rating. Now, also the online banks, a lot of them are covered under deposit guarantee schemes. So same situation we have here in Ireland, whereby if a bank fails, let's say, the Irish government insure that deposit up to, let's say, €100,000. It's the same with these online banks.
So it's safe. That's just what people were wondering about.
It's as safe as you can possibly ask for.
Now, a lot of us have money sitting in accounts that are not making a penny for us.
Yes, absolutely.
So what's the difference in these guys?
So yeah, you're dead right. I mean, central bank statistics show that there is about 160 billion on deposit in Ireland. So we're clearly very good at saving.
160 billion?
Yeah. So we're quite good at saving as a nation in the main, but we're not very good, as I said, at making sure that that's in the right place. So for instance, if you look at a typical, say, Irish bank account, just your standard, say, demand deposit account, that might be giving an interest rate of, say, 0.25%. But you can get tenfold on that by moving over to a higher interest-bearing account, because there's rates available in the market that are very accessible of, say, 2.83%.
Okay. We have made up a fictional character called Margaret, and Margaret has €20,000. So we're going to take a look at the different ways Margaret can invest that and how much money she can make back, okay?
Yeah, let's go for it.
So let's take a look at our first graphic here. So this is 20,000 1 year with access.
Yeah, so this is a demand deposit account. This is the one that maybe resonates with most people. They want to put money in at any stage and take it out at any stage. So the first one is a AAA credit-rated Swedish bank called Normal Bank, which is available through a platform called Raisin. And they're currently paying an interest rate of 2.81%. So that would mean that Margaret would earn net interest of €382 over the next 12 months.
Lovely. So then will you explain Raisin for us? Because we were chatting about this app earlier on, and it was new to us as well.
Yeah, Raisin are great. I kind of describe it to my clients as kind of a one-stop shop for savings accounts. They are an Irish-based deposit provider, but they allow you to access different rates from different banks in Europe, let's say. So you can have money with a Spanish bank, a Portuguese bank, a German bank, a Swedish bank, let's say, all through the one platform, and there is the possibility of moving or having, various different deposits all within the one platform.
That's really interesting. So this one app, really, I suppose, you can jump around and they'll get you the best rates. They'll show you what's available at the moment. Is that right?
Yeah, absolutely, Maura. So you have, let's say, fixed-term deposits, which are, you are locking in a rate for a specific period of time, or you have your demand deposit accounts that we just covered.
I want to show that graphic again there because I jumped ahead slightly there. So it's 382, and then with the Trade Republic, you're going to get 369.
That's after dirt, isn't it?
That's after tax.
Yes, both figures.
Okay, so if Margaret had the 20,000 for 1 year with access in one of the pillar banks we have here, what interest would Margaret get? In comparison to what we see on screen, David?
Yeah, so some of the banks advertise like online savings accounts and they advertise rates of up to 3%, but sometimes it's not all what it seems because it might only be, say, for regular monthly savings, not lump sums, or it might only be, say, for a certain period of 12 months or maybe up to balances of €12,000 and then it reverts to a really low rate. But if you just want a standard savings account, it's probably about 0.2%.
Yeah, that's the standard kind of Irish account.
Standard, yeah.
Unless you lock it in. OK, let's take a look at the next graphic and we'll just kind of talk through here and we'll move along.
Sure.
OK, so this €20,000, so this is what you just said here with the domestic banks, but you have to lock it down. So this is 2 to 3 years you have to leave your money in with no access to it. So you have to leave it put to the 20 grand.
Yeah, so because interest rates are starting to come back down, you'll find a lot of people now are trying to lock in the rates while they're there. So it is actually the Irish banks that are leading the pack on 2-year and 3-year fixed rates at the moment. So you've AIB, their 2-year fixed rate is paying 2.77%.
That's very good.
Yeah, it is decent. It will be giving a net interest of €752 over that 2-year term. Then you've permanent TSB, their 3-year one is 2.1% per year. So you'll be coming out with, or Margaret will be coming out with net interest of €862 after the 3-year period.
After the 3-year period, okay.
But I suppose when you look at the outside Ireland banks or the European banks or whatever, they can offer a lot higher rates for non-locking in. That's the trick here, isn't it? I mean, if you can still access your money at any time and still get a high rate.
Yes, yeah, with the demand deposit.
That was the
accounts.
first one, yeah, okay.
Exactly. So that's like a tenfold on what a typical Irish
That's what I mean, a tenfold. That's a lot.
It's massive. Yeah.
It certainly is because, say, in the first graphic you would have it for a year and you had access. You're locking this away for 2 and 3 years, 20,000, and you can't touch it. Now, I'd imagine if you needed to touch it, there are penalties that goes along with something like that, David.
Yes, usually it's a case that you can't access it, that's it, or else there may be penalties in some cases.
Let's take a look. If Margaret put her money in for 5 years, we have a graphic to explain this, and this is really interesting, I think. So this is Margaret locking down her 20 grand, and after 5 years there's no access. Tell us about these banks here.
Yeah, so the first option is through a AAA credit-rated German bank called Ariel Bank. That's through Raisin.ie that we were referring to earlier, and that's giving an annual rate of 2.9%. So Margaret will be coming out with net interest over that 5-year period of 1,943. And then the second option is, we're all very familiar with the state savings and on-post savings. It's giving an annual return of 1.74% currently over a 5-year period. It is tax-free, of course, so Margaret, in this case, will be coming out with €1,740.
So it's fair to say, David, for the two figures we see on screen there, they're the best case scenario here in Ireland and if you go on the internet.
Yes.
But I think if we go back to that last graphic again, you still have very good rates if you're willing, if you can put your money away for 5 years. Isn't that the good thing to do? And look at these rates
almost
here.
10%.
I mean, it's amazing. Yeah, the unpaused, that, as you said there, the tax-free one. I mean, to net 1,740 after 5 years on a €20,000 saving is pretty good.
It's really attractive, yeah, particularly for people that have large lump sums that they don't foresee them needing in the next couple of years. Like, it's a no-brainer. I don't believe anyone in Ireland should be accepting 0% interest on their savings.
And we are.
Yeah, we are.
And some of us don't even realise we might have accounts that it's sitting there. It's tradition. We've just stayed with the same bank forever.
Yeah. Because we often talk about changing suppliers more.
We do when it comes to electricity and gas and all that, yeah.
And should we be thinking the same way, David, when it comes to our banking?
Oh, 100%, yeah. I think Irish people were not very good at shopping around and, as I said, trying to make sure that our money's in the right place. Unfortunately, with maybe insurance companies and the banks and stuff, they don't necessarily reward us for loyalty, and it can definitely put a lot more money back into your pocket by shopping around. Yeah.
Okay.
Now, what we saw on screen there, I suppose, very basic. They're mathematical, if you like.
That's what they do, yeah.
Are there any kind of catches, things we should be looking out for? Say, for example, you look under the bonnet to see what's there.
Yes, sometimes you do need to look beyond the rate. I already mentioned some of the banks, the Irish banks that are offering, say, well, advertising 3% rates, but it might only be payable on a certain amount or a certain term, let's say 12 months or up to 12 grand, and then it reverts to a low rate. Revolut, which is obviously an online bank that resonates with a lot of us, they advertise these flexible cash funds, okay? But some of them come with certain caveats. One of them, it involves you holding money in a different currency, let's say US dollars, and then you're taking on currency exchange rate risk. Also, the money could be in something called a money market fund, which is basically like a fund made up of loads of different deposit rates. So it's not like having a deposit directly with a bank. Now, there's two main downfalls of that. One is the tax. Funds in Ireland are subject to a tax rate of 41%. That's exit tax, as opposed to dirt tax, which is 33%.
And we should, just before you go, what if somebody dies and then your money is in a bank which is not in our jurisdiction? What about probate and all that? Could that be an issue?
Yes, it's a great question, and it is a concern that a lot of people have. I suppose the advice I would give to people is that if you are concerned about it, maybe speak to your solicitor, get the right advice, make sure that all the accounts that you have are in your will. I believe with some of these online banks, if the money in them is over a certain threshold, you do have to go through the probate process in that country as well.
Well, just to know that.
David, thanks so much.
Absolutely great to have you with us.
We have one job for you before you go.
Yeah, we're going to hold you there now for a second.
If you have any questions about all of that, please do email us today at rte.ie, and we will put it to our experts. Now we're
in a conundrum.
Yes.
We do, slightly, because we have a winner for our competition today. That is Mary Greenway from Cork, but we can't get her on the line. But congratulations to you. But David, you're going to have to pick for us.
There's €1,000, 1,500 and €2,000. So will you pick one there, David, please?
Go on now, your money, man.
Mary.
Will you go with C?
We're going to go with C.
I'll take the other two more.
You take the other two, okay.
Okay, so what's behind?
So you could win €1,000, €1,500, Mary, or you could win €2,000. Well, listen, I'd be investing with David. £2,000, rock on.
Well
You've won €2,000.
Well done. Lovely stuff. Come here, I'm just going to open A here as well. So A had €1,000, and B, just for transparency, folks, 1,500 Mila Euro. So well done, David.
Thanks, David. Thanks for this, and thanks to Mary as well for the £2,000.